Have you ever stopped to wonder what happens behind the scenes when you swipe your card at a store or enter your card details online? Well, it's not as simple as it may seem. In today's video, we're going to take you through the fascinating journey of a card transaction, from the moment you swipe or tap, all the way to the final payment. We'll dive deep into the differences between credit and debit cards, the complex systems involved, the security features, and how you can make smarter financial decisions with every payment. Understanding the basics. Let's start by breaking down the key differences between credit and debit cards. Credit cards. These cards allow you to borrow money from a financial institution, like a bank or a credit card issuer. Each time you use the card, you're essentially borrowing money up to a pre-approved credit limit. You repay the borrowed amount later, usually within a grace period, to avoid paying interest. Debit cards. These cards are directly linked to your bank account, meaning when you use them, you are spending your own money. There's no borrowing involved here. The money is immediately deducted from your available balance, so you're only spending what you have in your account. The journey of a transaction. No matter which card you use, every transaction follows a similar process, involving a few important steps and parties. Here's how it works. 1. Initiation of the transaction. When you swipe, tap, or enter your card details online, the information, such as the card number, expiry date, and security code, is sent to the merchant's payment terminal or website. The merchant collects this data to begin the transaction. 2. Authorization process. Next, the payment data is sent to a payment network, Visa, MasterCard, American Express, etc. This network acts as an intermediary, ensuring that the payment reaches your bank for approval. Your bank will check if you have sufficient funds in your account for debit cards, or if you're within your credit limit for credit cards. The bank will also evaluate factors such as your spending habits and credit score for credit card transactions. If everything checks out, the bank sends an authorization code back to the merchant. This means the transaction is approved, and the payment is temporarily held or earmarked. 3. Settlement and clearing. After the transaction is authorized, the merchant's bank, the acquiring bank, submits the transaction details to the payment network. The payment network then sends the details to your issuing bank, which completes the transaction. For debit cards, the funds are immediately transferred from your bank account to the merchant. For credit cards, your account is billed, and you will receive a statement at the end of your billing cycle. This entire process happens in a matter of seconds, though full settlement may take a couple of days. Deep dive into credit cards. When you use a credit card, you are essentially taking out a short-term loan from the bank. Here's what you need to know about credit cards. Credit limit and borrowing. Your credit card comes with a maximum borrowing limit, which is the amount you can charge to your card. Every time you make a purchase, the amount is deducted from this limit. Going over your limit can lead to over-limit fees and may hurt your credit score. Grace period and interest. Most credit cards offer a grace period, typically between 20 to 30 days, during which you can pay off your balance without incurring interest charges. However, if you don't pay off the balance in full by the due date, interest will be charged on the remaining amount, often compounded daily, which can quickly add up. Rewards and perks. Many credit cards offer perks such as cashback, travel points, and discounts. If you're responsible with your spending and pay off your balance in full each month, these rewards can be a great bonus. Building credit. By using a credit card responsibly, paying off your balance in full and on time, you can build a positive credit history. A good credit score can be invaluable when applying for loans, mortgages, or even renting a home. Fees and penalties. Credit cards come with fees such as annual fees, late payment fees, and penalties for exceeding your credit limit. Understanding these fees is crucial to avoid falling into debt. Deep dive into debit cards. Debit cards, while simpler, have their own set of features and benefits. Direct link to your bank account. Since debit cards are directly linked to your checking or savings account, you're only able to spend money that you already have. This can help you stay within your budget and avoid accumulating debt. Immediate funds deduction. When you use a debit card, the money is immediately deducted from your account. This ensures that you're spending only what's available and can help prevent overspending. Limited impact on credit. Unlike credit cards, debit cards don't help build your credit history. Since no borrowing is involved, your credit score is unaffected by how you use a debit card. Security features. Debit cards often come with PIN protection, and many banks also offer fraud protection services. However, since the money is deducted directly from your account, it's crucial to monitor your account regularly to spot any unauthorized activity as soon as possible. Payment networks and security. Both credit and debit card transactions are powered by sophisticated networks and advanced security technology. Payment networks. Visa, MasterCard, American Express, and others use advanced encryption and tokenization methods to protect your transaction data as it travels from the merchant to your bank. This ensures that your sensitive information remains secure. EMV chips and contactless technology. Today's credit and debit cards come equipped with EMV chips, which generate unique transaction data each time you make a payment. This makes it harder for criminals to replicate your card. Contactless payments, using NFC, near-field communication, technology, allow you to make secure and fast payments without having to insert or swipe your card. Fraud detection and dispute resolution. Banks use machine learning algorithms and real-time transaction monitoring to detect unusual spending patterns. If they spot any suspicious activity, you may receive an alert, and your card could be temporarily suspended. If fraudulent charges do occur, you can dispute them with your bank and, in many cases, get your money refunded. Practical comparisons and use cases. Let's compare some scenarios where each type of card might be more beneficial. Everyday purchases. Debit cards are ideal for regular, day-to-day expenses, like grocery shopping, where you want to keep your spending within your available balance. Building a credit history. Credit cards are better for building a credit history, especially if you use them responsibly by making on-time payments and avoiding carrying a balance. Emergency situations. Credit cards can provide a financial cushion during emergencies, offering a short-term loan when you don't have enough cash in your account. Rewards and cashback. Credit cards often provide rewards such as cashback, travel points, and discounts. If you pay off your balance in full, these perks can be an added bonus to your regular spending. Tips for responsible card use. To use your cards wisely, here are a few tips. Monitor your accounts. Review your bank and credit card statements regularly to spot any errors or fraudulent transactions quickly. Pay on time. Always pay your credit card bill on time to avoid interest charges and late fees. Budget wisely. Use your debit card for everyday expenses and avoid overspending, as it directly affects your bank account balance. Understand your card's terms. Get familiar with the interest rates, fees, and reward structures of your card to avoid any surprises. Set up alerts. Most banks offer alerts for transactions, which can help you stay on top of your spending and spot any unauthorized activity immediately. The evolution of card technology. Over the years, card technology has evolved. Magnetic strips to EMV chips. In the past, cards relied on magnetic strips, which were easier to clone. Today's EMV chips offer enhanced security with dynamic data for each transaction. Rise of contactless payments. With the advent of smartphones and smartwatches, contactless payments have become the norm, allowing for quicker and more secure transactions. Mobile wallets. Services like Apple Pay, Google Wallet, and Samsung Pay allow you to store your credit and debit cards digitally on your phone, making it easier than ever to make payments. Real-world impact and future trends. As consumer behavior changes, so do the ways we use cards. From carrying cash to relying on digital payments, understanding these trends helps you make better financial decisions. Technological advancements. Blockchain, biometric security, and AI-driven fraud detection are all shaping the future of card payments, making them more secure and convenient. Financial inclusion. Cards play a crucial role in financial inclusion, offering access to digital payments for individuals who may not have access to traditional banking services. Credit and debit cards are much more than just tools for making payments, they are key components of the modern financial system. Credit cards offer the flexibility to borrow, earn rewards, and build credit, while debit cards help you stick to your budget and avoid debt. By understanding how these cards work and how to use them responsibly, you can make better financial decisions. So, what do you think? Which card do you rely on more, credit or debit? How do you manage your spending? Drop your thoughts in the comments below. If you found this video helpful, don't forget to like, share, and subscribe for more financial tips and insights. Thanks for watching.